Hello everyone, welcome back to my channel. So this video marks the end of the week number 57 in this road to 100k realized return challenge, and in many ways this has been a perfect week. I can't recall having had in recent times a week just as perfect as this one, and not necessarily because of the earnings, which were high this week. We managed to collect a lot of profits this week, but the way we put in our trades, we were expecting that the market would perform in a specific way, and the market did exactly how we wanted, except for one instance that I will explain later. But even that instance in which it did not turn as we wanted, the market then behaved in a way that gave us even more profit than we were expecting. And so in many ways, yeah, it was definitely a week to remember. But yeah, let's get started. As you can see here, we have no positions at the moment. All our contracts or option contracts either expire worthless. All the shares that we held during the week were assigned, and yeah, this is basically how we went. And looking here at our scoreboard, we managed to finish the week with 2,381 euros and 38 cents. But, and I will explain this later, we also had, because of these QQQ shares, we managed to collect a 800 euro profit, capital gain, and so the overall profit that we had surpasses the $3,000 because we were assigned at this point here. These puts were assigned, and we were forced to buy 400 shares of the QQQ at 573, and then we managed to sell them the next day at 775 a piece. And so with 400 shares and a $2 above a $2 profit on each share, this gives us a grand total of $800. Now, as I was going to say, and looking here at the beginning of the week began in a very mundane way. The premiums were not anything remarkable. We managed to go ahead and sell 11 contracts. As I mentioned in the previous video, we sold 11 put contracts on the IWM, and along with 3 contracts on the ARKK. And even on Monday, we still managed to buy back these puts because they were almost worthless. They were at 1 cent a piece, and we still managed to sell 4 contracts on the QQQ, which expired worthless, as you can see here. And then the next day, we did the same thing. We got again 11 contracts on the IWM, and now because the premium was the strike price was slightly lower here than on Monday, we still managed to get enough buying power left over to sell another put on ARKK with the same strike price as we did the previous day on Monday. Now again, these puts were almost worthless at this point, and we bought them back, and again we did the same thing. We sold 4 contracts on the QQQ at the end of Tuesday, and they expired worthless again. So all in all, very good. Even though nothing particularly remarkable, this is our MO, modus operandi, yeah, on a day-to-day basis. Now, from Wednesday onwards, this is where things get really interesting, and this will be a focal point in, like I said, in a video that I will post either tomorrow or perhaps on Monday, because uh, it's an important point to make. On Monday, September the 1st, markets will be closed because it's Labor Day in the United States, so there will be no videos posted on trades next Monday, and so that video will be posted on Tuesday or on Wednesday morning, depending on my availability. But because the market is closed. Of course, there's nothing to post, but I will share one big concern that I have in another video regarding this Wednesday over the course of the next few days. Now, as you can see here on Wednesday, we decided not to go for the IWM primarily, and we went for 4 puts directly on the QQQ with the 568 strike price, as you can see here. And these were the puts that eventually were assigned. Actually, these were not the ones that were assigned, but that takes some explanation. But basically, here they are. These are the puts that we sold in the beginning. And why is that? Because Nvidia was going to release its earnings this particular day. And because of that, the premiums of the QQQ were extremely high. I recall, and if we look here, I'm just going to show you here. It's probably better to show, yeah, this way. Now, if we look at the weekly chart, yeah, this is where we were, yeah, and so this is where the market began. So the market began the day at around 570, 571, more or less around that. And we went fairly conservative. We went for a 568 strike price, so around here, some way below the stock price. And we still managed to collect, I think 95 cents a piece for each share. Yeah. We still managed to collect this awesome premium, which is extremely high. Now, because of all the money that we still have left over, because we only sold 4 put contracts, we still decided to use the buying power we had available, and we still sold another put contract on the IWM, which we bought it back here. And because we bought it back here, we still sold another put on IWM here. But then, because the premiums were extremely high, even towards the end of the session, and you can see here the time at which I bought these puts at on QQQ on 568, I decided to buy them back right at the end of the session. So in the dying seconds of the session, because the puts were going to expire worthless, but still I had to pay 40 cents per each share at the end of the session. These are puts that were going to expire in the next few seconds, and still the premiums were extremely high. But because at the time the stock was trading at around 573 and a half, I felt that, all right, it's probably, if I buy this back and I sell this one at 573, in all likelihood this will expire out of the money, and so I will manage to pocket a huge premium right here. And so this is exactly what we did. We bought back these puts. We paid 40 cents a piece, so we had to pay 160 in order to grab this one, these puts at 573. Same for contracts, but we received instead $712. So between this trade at the very end of the session, I recall that I sold these options with 5 seconds to spare in the session. We managed to pocket here, as you can see, $552, of course excluding the fees, but you can see exactly why I did this trade. But then something interesting happened, which was 5 minutes later at 10:20 a.m., 10:20 p.m. here in Central Europe, which was the exact time at which Nvidia earnings would be released. The stock plunged, the QQQ stock plunged. I don't know what happened to Nvidia shares. I know they came down, but it doesn't really matter what happened in there. What matters is that the QQQ shares, 5 minutes after the trading session ended, they came down from those 573.5 to around 750. And so apparently this was the deciding factor why whoever bought these puts decided to exercise them, and so I was forced to buy these shares at 573, even though when the trading session ended, these puts were out of the money. And so that's why we paid 573 here. But then, right at the next day, the stock was already, even before market opened, the stock went around 575, 575 and a half, and then came down to 574 and a half. And it was around that price, 574 and a half, that the trading session began on the next day, on Thursday. And so we went immediately ahead and we decided, all right, we are going to sell the 575 calls. And so we are targeting a $800 profit because it was the closest to the price, but still out of the money call that we had. So we maximized the premium that we could take, or so I thought. I thought I was maximizing the premium I would be able to take. And so as you can see, we sold these calls right at the beginning of the trading day, but immediately the stock shot up towards 576 and beyond. This premium that we received, which was $1.24 a piece. So just by selling these 4 contracts, we got $496 right there. But immediately the premiums shot up to around $1.80. So if we waited a few more seconds, we would have sold calls at a higher strike price. And given the fact that the stock ended the day at around 576.80, we would have had a larger profit. Instead of the 800, we probably could have had 1,200 dollars in profit. But of course, hindsight is always yeah, useless at this point. So, but still, we managed to get another put on IWM with the spare cash we had, and of course these calls were assigned. The put on IWM expired worthless, and so we sold the shares at 575, meaning we received $800 more than the price at which we bought the shares. Now for Friday, and here this is another case in which really the market really went our way, because Friday, yesterday, again at the beginning of the market, I took one more minute because I wanted to see if the QQQ options were still very inflated in terms of premiums, but they were not. The hype about the earnings release of Nvidia had subsided, and because of that, we decided to revert again to the IWM. But keep in mind that this was an important day as well because of the PCE announcement, and so which basically came in line. I have a news piece here in which the stock market. This is what happened basically on the stock market, and here the key measure of inflation is July, the personal consumption expenditures, the PCE. All the numbers came pretty much in line with what the expectations of the analysts, but still the readings were a bit high, and so that's one of probably the main catalysts for the stock prices, for the stock for the market to come down. As you can see here, both the S&P 500 and the Nasdaq and the Russell 1000 came down on Friday. But then the interesting that happened was that shortly after we sold these puts, these 10 puts, because we do not have enough money to sell the 11th put because the strike price was already a bit high. We used the remaining money to sell 3 more puts on ARKK, and we bought back the 4 puts that we have initially sold here on the ARKK. We bought those back at 1 cent, and we used that money to sell another put on IWM. But this time we chose the 234 strike. And why is that? Because at this point, these puts, 235, were already in the money. You can see here that half an hour, or rather 40 minutes later, I received more premium for this put than for these. And these, under assuming all else equal, should give a higher premium because they should be closer to the stock price, or should be more in the money, and so than these ones. So that's why this is a very contrasting figure. And so we received 32 cents for these. These were still out of the money. These ones were already in the money. And I'm going to show here the graph of IWM for yesterday. Yep, stock. And here is the graph for, yeah, with the graph for 1 day. And here this is the cutoff point of the strike price, the 235. And as you can see here, at this point, and for a large portion of the day, the stock was either the puts were either in the money or very close to it. And at this point, I was thinking already, all right, I'm going to spend the weekend and next Monday with 1,000 shares of IWM in our portfolio. But then, all of a sudden, at the end of the day, the stock started to rise up, and and the puts, of course, because the stock went past the 235 mark, the puts then went out of the money, and as a result of that, the puts here, these puts, the 10 puts, expired worthless with no value, and we kept the all premium, which was exactly what we wanted. We would rather have not have the shares because we are going to spend a few days without the market open. We don't know what's going to happen, and so we might as well don't have the exposure to the market without knowing what is going to happen over the next few days. And so the ARKK shares, the puts that we also sold at 74.5 were also expired without value, even though here, as you can see, at some point here they became very close to being in the money, but that never came back. They never came back down, and so they recovered and stay at around 74.80, 74.90, which was, especially in the case of ARKK, exactly what we were looking for. We really don't want to have these shares for a large period of time. And of course, goes without saying, if the 235 put expire worthless, even more so was the case of 234 put. So with all of this being said, this was a absolutely perfect week. It could have been even better, of course, if we had waited a bit more some more minutes to sell the calls on the QQQ, and by then would have used a slightly higher strike price, 576, 577, and would have we would have got some more profit out of the shares. But still, we cannot have every single detail out to perfection, so up to absolute perfection. This was as perfect as we could get, and so yeah, this was very good. But still, we cannot forget the fact that what happened on Wednesday is something which is very, very scary. And I'm going to, yeah, as I mentioned, speak about that on another short video, because I think this is something that is very important, and all of us market participants should be aware about that. But for the time being, this is all. Yeah, remember that on Monday there won't be any trades because the market is closed. So the next trading day will be on Tuesday, and I will show you then what the trades were. Again, we'll probably do the same thing, a mix of IWM with ARKK, IWM puts expiring worthless or being close to worthless will be replaced by QQQ puts at the end of the day, and that's how we will continue to operate. For the time being, this is all. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you want to ask me any questions, and of course feel free to like the video and subscribe to the channel. And we will reconvene on either Tuesday evening or Wednesday morning to open up the week number 58 in this challenge. And I'll see you there.